The new year of investing community is highlighted by the battle of short sellers and retail investors, which shows GameStop to increase its stock price to 600%, causing the short sellers to lose $6 billion as of January 26, 2021. Then, we saw other heavy shorted stocks also run up like AMC, which stock price fly high to $21.81 at the pre-market on June 28. Meanwhile, Bed Bath and Beyond went to $53.5, while the star of the month is GME, which leaves the shorts to cry at above $500. Until then, Robinhood and interactive brokers and other brokerage limit its trading into liquidation only to stocks like AMC, BlackBerry, Bed Bath & Beyond, AXPR, COS, NAKD, and Nokia. It caused the heavily shorted stocks to tank on January 28, 2021. However, the damage has been done. The retail investors got the nerves into the short sellers, giving the taste of their own medicine. GME squeezed them hard to the extent that they have to use the unlawful force to limit retail investors' trading activity, which to me is unfair or not legal because it's not even dictated by the authorities. It's not fair that they will decapitate the other side of the market while the other arm is working, the hedge fund or the big boys. Though this quest will eventually return to normal, but the question is when? Once the GME's apex squeezing comes to an end, then sure, or it might be there will be another stock to rise acting like a tidal wave after the quake that is being emanated by GME. What is this stock? This one we are going to talk in this video. But first, let us talk what is a short squeeze. A short squeeze occurs when a stock or other asset jumps sharply higher, forcing traders who had bet that its price would fall to buy it in order to forestall even greater losses for profit. As short sellers borrow shares of an asset they believe will drop in price in order to buy them after the fall. Therefore, they can earn a profit for that. If they are right, they return the shares and pocket the difference between the price when they initiated the short and the actual price. But what happened in short squeeze? A short squeeze accelerates a stock's price rise as short sellers bail out to cut their losses. This happens to GME, the squeezing which being worsened by its outstanding shares relative to shorted shares, which short interest is more than its outstanding shares. Imagine 102%, right? So without further ado, which stock has the potential to be the next GameStop? According to Seeking Alphas at its article, the next GameStop had listed 25 stocks which were heavily shorted. That includes Legan Pharmaceuticals, the Macerich Company, and Tanger Factory Outlet Center, with short interest at 61.63%, 53.95%, and 47.94% respectively. Looking the stock individually, Legan has a price over $100, which is expensive to me for a squeeze play. While looking at Tanger Factory, it has $19 and $65, which makes me believe that it could be a good play. However, my friend Teddy Ramos, who has a YouTube channel too, you can subscribe to him as well, as he'll be producing an option and investment video soon, told me that if I want a squeeze play, then I have to choose MAC, which I had agreed after looking its fundamentals and my due diligence. Using the IKR terminal, I found out that MAC is an equity real estate investment trust. Macerich is a fully integrated, self-managed, and self-administered real estate investment trust, which focuses on the acquisition, leasing, management, development, and redevelopment of regional malls throughout the United States. It currently owns 51 million square feet of real estate consisting primarily of interest in 47 regional shopping centers. Macerich specializes in successful retail properties in many of the country's most attractive, densely populated markets with significant presence in West Coast, Arizona, Chicago, and the New York to Washington, D.C. corridor. So to me, this company, this real estate company, this REIT, is actually positioned to a better market once we had recovered from this pandemic. In fact, according to Morningstar crowdsourcing a short squeeze, it stated that among stocks that have large short interest positions, MAC is the only which they viewed as undervalued. Accordingly, Macerich the past few years has successfully become an owner and operator of Class A regional malls, which they had rated the company with 4 stars. Though it has no economic moat or distinct competitive advantage, as we all know that barrier of entry on real estate investment is not high. However, Macerich has achieved the #1 GRESB ranking in the North American retail sector for 5 straight years. So therefore, Macerich in investing on this REIT is actually playing a value stock which could give an investor a higher return in the future, or like I said earlier, when pandemic is gone or done, because it actually put their name as one of the leader in mall management or real estate management. With that leadership, even at the midst of pandemic on January 28, 2021, MAC had declared a cash dividend of 0.15 per share of common stock payable on March 3, 2021 to stockholders of record at the close of business on February 19, 2021, which further gives me the reason to invest in the stock, along with its strong balance sheet with cash and cash equivalents of $528 million as of September 30, 2020, while having a total assets of $9.2 billion for a total liabilities of $6.5 billion, for a total ratio of 1.42, which means that for every dollar of liability, there was an excess of 42 cents of assets for company stakeholders at the event of liquidation. Although debt-to-equity ratio is 2.46, which is higher than 1:1. However, this is a REIT company that provides continuous dividend to its stockholders, which deplete its retained earnings. This is actually the reason why this debt-to-equity is higher. In fact, it has an accumulated deficit of $2.1 billion. Note that its competitor Prologis Inc. or PLD has negative $2.2 million of accumulated earnings. So it means that it is normal for those REIT companies having an accumulated deficit. Talking on a value play, MAC is traded at 11.21 multiple enterprise value over revenue compared to PLD's 24.96 multiple and SPG of 12.9 times, while enterprise value over EBITDA is considerably undervalued with 3.82 times compared to Prologis 30.05 times and SPG's 14.4 multiple. While it is being traded at 3.82 times enterprise value over EBITDA compared to Howard Hughes Corporation or HHC when it comes to real estate management and development. Meanwhile, it has a price per book of 1.15 times compared to its REIT counterpart PLD with 2.39. And to real estate development counterpart HHC having 1.30. This matrix shows to us that MAC is undervalued compared to its peer as viewed by Morningstar. It has a high target price of $57, a low at $6, which might be because of the pandemic, resulting to a median price of $11.50 on 2 buys, 1 outperforms, 6 holds, 3 underperforms, and 6 sells. With that being said, compared to other companies that had squeezed out the short sellers, MAC has his own rights to squeeze the shorts further. A short interest of 54%. It has a days to cover of 11 days compared to GME now, which is 2.5 days, while AMC only 0.6. Therefore, if you're looking for a gigantic wave short squeeze that could result into a higher stock price like GME, MAC is the best option to buy right now for this speculative play. But this stock is not only used for long attack, but a value play as well, being undervalued over its peer. In like manner, it is an excellent REIT play which provides quarterly dividend. The stock has now 3.16% annual dividend yield, forward annual dividend yield, according to Yahoo Finance. Every increase on declared dividend may cause its stock price to increase, and once we recovered from this pandemic, they might increase this dividend once the business is fully recovered. MAC is also a beautiful stock to hold as a recovery play, just like a travel and tourism industry. We all know that we people loves to go to the malls, right? There is no new normal. We love to go outside. Until then, we become crazy, right? I personally have 220 shares of this stock at average cost base of $19.7. I also have a call options to this one, a $30 call option to expire in February 19. I swing my new shares for this play with MAC, which I believe will be valuable to me or a worthy move to me, to my portfolio in the future. I will hold this stock medium to long term or until the happening of short squeeze. Of course, I have to take profits. That's all for today, guys. So if you like this video, then click that like button. And also, if you have not subscribed to this channel, please click that subscribe button as well. And also, do not forget your notification bell so you will be keep updated on my upcoming videos and or you want more update with MAC. Always remember that I am dropping a video once or twice a week.